Hello, everyone, and welcome to today's edition of Enterprise Chat at MSME Africa. I am Aranimi. Nigeria's inflation rate stands at 26.72% for the month of September, and amid a worsening cost of living crisis in Africa's largest economy, the MSME sector is already vulnerable despite the federal government's promise of palliatives, which are yet to be disbursed. Now, recently, the Central Bank of Nigeria lifted foreign exchange restrictions on 43 items, which includes rice, margarine, cement, toothpicks, and others. And this news has been met with mixed reactions from stakeholders, especially local manufacturers and MSMEs. But is this a step in the right direction? Let's chat to Dr. Muda Yusuf. He's the CEO of the Center for the Promotion of Private Enterprises. He joins us on the conversation. Good morning, Dr. Muda. It's good to have you join us this morning, sir.
Thank you very much. Thanks for having me.
All right, I think I should begin from my question. Is this a step in the right direction? What perhaps are your own, what are your thoughts? What's your reaction to this?
Well, it's a step in the right direction because the whole idea is to sanitize the foreign exchange environment, is to ensure that the policy environment is normalized and regularized. That is the whole essence. Because as we speak, many of the items which were excluded from the foreign exchange market are already covered under the fiscal policy measures of the federal government. And in any normal economic environment, issues that borders on imports and exports are managed and handled within the purview of fiscal policy authorities or the fiscal authorities. This is why we have a tariff book. This is why annually we have the fiscal policy measures. So the decision of the central bank in the first place to have a separate list of items to be excluded from the foreign exchange market was an aberration. So I think what the CBN had gone now is to correct that aberration. Yes, fears have been expressed as to whether this will not open up the official or the foreign exchange market to more demands and so on. Well, I think that fear is exaggerated. I say so because, for one, many of those products were not actually banned. They were only excluded from the official window. So that means even before now, they had the privilege of going to the parallel market, to source for foreign exchange. And in any case, even for products that were not excluded, not up to 20% of them are able to access the official window because there's no liquidity in the official window anyway. So the impact, for me, is not so significant. But more importantly, is to normalize the policy environment. And if there are any gaps that we need to deal with regards to products that we should encourage for importation or discourage from importation, we can do so within the purview or within the framework of our fiscal policy measures. We cannot do the right thing the wrong way. The idea perhaps may be good, but we need to do things properly. I think that is what this whole review and policy is all about.
All right, thank you so much. One of the key points I picked is that the policy is to sanitize the FX environment. But I would also want us to look at, because I know you've also spoken a bit about it, the potential implications of this policy on demand for locally produced goods and services for MSMEs. And if we also look at the implications for, Nigerian farmers, food processors, how will the policy impact the competitiveness of MSMEs relative to imported goods?
Well, it's not going to have any serious negative effect. If anything, given what the exchange rate is today, and given the fact that many of these products are already attracting very high tariffs, and some of them are already even under import prohibition. So this is a time for the domestic players to even have an advantage over imported goods. Because right now, almost 80% of the forex requirements in the economy are met outside the official window. That means economic players are sourcing foreign exchange at over 1,000 naira, to the dollar. So this has created a competitive advantage for any product that is produced locally, particularly products that have high local content. If the local content is high, I think any product, whether it's in agri, whether it's in manufacturing, has a very great advantage at this time. So I don't see any major issue. And most of those products, just as I said, already are attracting high tariffs. So it's not even attractive for anybody to import those products, given what the exchange rate is, given the liquidity problem in the official window, and given the fact that some of those products are even already either under import provision or attracting very high tariff. That is not to say that the government cannot do a lot more within the framework of fiscal policy, either to put some of those products back on the import prohibition list or increase the import duty on them. Those options are still open.
All right, thank you so much, sir. I recall that you've also noted that there's no liquidity in the official window. Apparently, the CBN has a backlog, but how much of stability will this bring to our foreign exchange? Or how much would it help close the FX gap that we have in the market in the near to medium term?
Well, the policy may not have any significant effect on the value of the currency. The effect it can have is, and it's going to just be a bit partial or marginal, is the fact that because all those products that were excluded were before now demanding forex from the parallel markets. Now they'll be able to demand forex from the official window. But the reality is that even in the official window, there is no liquidity. Even for products that were even originally allowed to be patronizing the official window, there is no liquidity. So practically everybody is operating outside the official window. So what can help to improve the situation is the supply. Whatever the government can do to improve the supply, to improve foreign exchange markets, that is what can make the difference. And I know that the CBN is already taking some steps. Only yesterday at the Nigerian Economic Summit Group, the president promised that the government was going to clear all the backlog. The Minister of Finance also said that they were expecting some inflow of up to $10 billion US. So let's see how it goes.
Indeed, sir. So I know that there's been an outcry from the Manufacturers Association of Nigeria. So what other further anti-fragile measures can the government, adopt to mitigate the implications of this policy on the manufacturing sector, if it would even have any?
Well, for the manufacturers, I think what we should begin to look at, particularly at the SME level, is to see how we can reduce our exposure to foreign exchange. If we can progress a lot more with respect to import substitution so that we rely a lot less on imports, I think that will be a great advantage. This is not the time for any business to get too heavily exposed to anything that has high foreign exchange implication or that has high import content. So as much as possible, at a business strategy level, I think companies and SMEs should be looking more in the area of import substitution. I think that is very critical. And they should begin to also look at their line of products. If there's anyone that is too heavily dependent on imports, I think they should begin to reduce it, pending the time when the government is able to tidy up the macroeconomic issues, especially pending the time when the government is able to strengthen supply and restore confidence in the foreign exchange markets. I think look at the strategy on how to reduce exposure.
All right, Dr. Muda Yusuf, thank you so much for your time on Enterprise Chat today. We really appreciate you. I don't know, sir, do you have any final words that you might want to leave with us?
Well, this is the time for businesses to review their business models because we cannot just keep on complaining. We should look at our business model, look at our exposure to foreign exchange, look at our exposure to issues of credit, and see how we can present. Worrying about the macroeconomic issues, we should also begin to look inwards to devise an appropriate business strategy to cope with the current situation.
All right, we leave it at that. And this is where we draw the curtains. It's been an amazing time talking to Dr. Muda Yusuf. He is the CEO of the Center for the Promotion of Private Enterprise. It's been an amazing time with you this morning. Thank you so much for your time, sir.
Thank you very much, my pleasure.
So it's been a very insightful time talking to Dr. Muda Yusuf. We've just looked at the Central Bank of Nigeria restricting or lifting the ban on FX restrictions on 43 items, which we discussed today. And one of the key points or the key takeaways, like he has mentioned, for businesses operating in this environment is well to review your business models and make sure you would not import dependent. And this is where we leave it today till we join you next time on Enterprise Chat. I remain Ara Mimi, but don't forget you can connect with us on our social media platforms on Instagram, Facebook, and YouTube at MSME Africa. Until we see you on Enterprise Chat next time, it's goodbye from here.